Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as y'all can tell from today's title, we are going over that death cross that happened on the weekly chart for Bitcoin. Is it good? Is it bad? Where are we going? What does it mean? I'm going to go ahead and provide you that answer. But before we cover that, we're going to go over Greyscale. Why is their NAV at a almost 50% discount? As well as, is the SEC losing control, or are they trying to take too much control? So if you guys enjoy those topics and enjoy today's content, please go ahead and drop a like below and go ahead and subscribe. That way you can stay up to date with my most recent videos that should be dropping Monday, Wednesday, and Friday going forward. So let me go ahead and pull up CoinMarketCap for y'all, just because you know we love starting the videos here. Bitcoin is coming in at 21,700. Ethereum finally got above that $1,500 range, as well as Cardano coming in at around 35 cents, with Matic at $1.18. And if you look up here, we have that coin market cap, or just market cap for all of the total crypto. Still above that 1 trillion, but you do know how I feel about this version of it. And you can see that Bitcoin dominance is slowly still approaching 42. But let's go ahead and dive into that Greyscale Bitcoin Trust story. And as you can see here, they did just recently get a new local low of 47% on their NAV, which is almost at that record we hit in December of 49%. Now, there could be a couple of reasons for this, which is what I want to highlight, which I think could actually be kind of a bullish sign for us going forward. Not so much a bullish sign for the immediate short term, and especially not a bullish sign for Greyscale or DCG, but I think it's a bullish sign that people are finally understanding the importance of self-custodial by themselves, and they're finally not being lazy. So what could be one of the main reasons why people are finally selling out of this? Because I do think the main reason of this discount is because, one, institutions and people who were buying this trust are finally buying the actual asset. They're wanting to learn about the technology. You can see companies are finally getting it on their balance sheet. You understand that now companies are officially letting people buy it in their 401ks, so you don't really need this trust anymore. So they're probably getting a lot of selling pressure from just the retail and institution, as well as they are selling some of their own Bitcoin holdings in Greyscale to help satisfy some of the creditors in their subsidiary partner Genesis. But I just want to show you, you can kind of tell that people are now getting wary of their self-custodialship, because you can just see Bitcoin on reserves have been declining steeply over the last 3 years. Mainly during the Bitcoin top and before we actually got the crash of some of these exchanges, it kind of stayed the same, but people are finally understanding three arrows, boom, Celsius, boom, and then FTX. Ultimately, we've got the biggest chunk of Bitcoin reserves, just almost, or not total Bitcoin reserves, but you can see almost, what is that, 300,000 just gone off of the exchange. So this is important to keep an eye out, because it shows that we are finally taking self-custodialship, which is what it was designed for. We don't need these grayscales, we don't need Celsius, we don't need FTX to hold it for us. We can finally be our self-sovereignty. And lastly, as y'all know, Genesis did go bankrupt, so ultimately they did sell some of their Bitcoin in their Greyscale. So this is why I did say it could be bad for the short term, because ultimately they could still be selling some of their Bitcoin, which would be ultimately pushing the price down, just so they could guarantee some of their creditors their money back. So it is good that they're giving money back to their creditors, but ultimately by them selling it, it is pushing the price down. But who knows, maybe those creditors will go buy on a different exchange and do it themselves. But let's go ahead and pull into that weekly cross. So let's pull up Bitcoin's chart so you can see it. It is the first time ever, and if we go on a later time frame with a longer stretch of Bitcoin history, you can just see here, oops, sorry, let's go auto. You can just see here, it has never actually crossed in Bitcoin's history. We have had a flirt with it, but ultimately, it's never crossed. So what does this mean for us in the digital asset? Well, we can only compare it to traditional markets. So let's go ahead and pull up the New York Stock Exchange ETF. And ultimately what I wanted to highlight for y'all is it actually did have some crossovers. You can see one right here. You can see one back here for a brief moment. And we actually just had one. And I wanted to highlight for you, you can see some interesting points. And I don't know if you would want to call a weekly death cross the death cross, because as you can see here, when it first happened, well, that would be bullish. When it crossed here, it was right after a dump, and ultimately it was the bottom. We fast forward. Right here, we crossed. Ultimately, it was a short bottom. We ran up. We had a crash, but how far was that crash from that bottom when it crashed? So we had a 15% drop from that bottom before shooting up. And this ultimately kind of flirted with the line of what we're happening right now. And then as you can tell right here, we had a bottom when it crossed, and now we are on the long way up right now. So we might see another push downward before we have that run up. But I just wanted to highlight this in the traditional markets because it has happened here. And instead of us going further down, which is typically what we see with the daily, on the weekly, we have seen that typically when it's crossed, the bottom already happened a little bit behind it, and it's just that confirmation. So I do think this could actually be a bullish indicator, because this combined with the Bitcoin daily chart that actually did have, the Bitcoin daily chart that actually did have a golden cross, which golden cross for short term we've kind of realized in the past does have a nice correction before shooting off. But we've now seen with the weekly, it could mean that that bottom was already in back here. So this is something I want y'all to pay attention to moving forward. If it does cross back over like we did see, we could have that 15% down from that bottom, which would have been right here. So 15% down from that would put us at that 13K that everyone's calling for. So it seems like a lot of things are pointing at 13K, 15K of a double bottom, or 17.5, 19.8, those CME gaps before going up. Seems like those would be those three areas for y'all to key in on. Do your own research. Now, lastly, I do want to go ahead and point out the SEC, because in this video I highlighted that just because they were talking about it being proof of stake does not mean just talking about it being staking on centralized exchanges doesn't mean they're going to stop anywhere. And as you can see, they started a case with Ripple. They started a case with Library. They just got done with the Kraken case as well as that Library case. And what do? Well, they're still on that power grab. And as you guys can see here, they're going after Paxos and the Pax dollar USDP and the Binance USD, which is BUSD. And these are the two stable coins that Paxos is kind of behind. So I wanted to highlight this for y'all because it is important to see what they're doing in the crypto space. Are they trying to force a lot of regulations to where it doesn't actually grow and help it? Because they're hungry for that power. They're concerned that this staking is gonna fight with the treasury bonds, treasury notes, treasury bills, so they want to completely wipe it off. Maybe they see these stable coins as a threat to a CBDC that they want to release, because essentially a CBDC, if done in a way by the government, could allow them to control all of your money. So it's important to keep up with it, and I wasn't kidding in that video, because I did see some of this coming, that I think we'll see a lot more SEC cases to come as they kind of see some of these projects are just bending over and allowing it to happen. But essentially, Paxos is telling them that they are fully covered. They are saying that they have all their reserves in the bank, and they do plan on litigating this in a court if the SEC does pursue and sue them over this, because that is what they intend to do, because they are saying that BUSD is an unregistered security. Now, I'm a little confused on how that would be, because with that Howey tests, right, you have to invest with expectations in return. Now, a stable coin that's pegged to the US dollar, I don't think you're really investing in that with the impression of returns. People would use that to have their money on the side ready for a trade. I don't see how that's any different from your, you know, your what's it called? Sorry, your Fortnite V-Bucks that was a craze back 4 or 5 years ago. I don't know how it's different from any of those Call of Duty coins that you need to play games. So just wanted to highlight this for y'all, because as you can see, just in this last year, the SEC is officially cracking down after they see all these bad actors come out, which is kind of funny because didn't y'all have meetings with the bad actors? Aren't y'all trying to cover that up right now? Just some stuff you want to look at yourself. But that is all I have for y'all today. I hope you did enjoy the content. Go ahead and drop a like if you did, and subscribe. But I hope y'all stay safe out there. Bye-bye.